Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio, and Tori, thank you for the intro, and I think the key word there is strategic, because we are going to discuss something within the precious metals portfolio that you should definitely be looking at if you haven't today, and that's platinum. Not only that, we're going to take a look at how platinum relates to some of the other metals you probably already own and why you should consider adding some. So before we get into that, let's take a brief look at what the metals have done over the last week. Gold currently at time of recording here on Wednesday sitting at about 18.15, but we had a little bit of momentum movement this morning, which came right back down. Gold jumped up to about 18.40 and then came back down, and we're going to discuss that. Tori, I know you've got some notes on that to go through. Silver currently sitting at 25.43, up a little bit from last week, but similar movement, big jump up over 26 today and then inching back down immediately following. Platinum, on the other hand, actually took a dive today. We're down to 10.20 on platinum, down pretty substantially just since the beginning of July even, from 11.44, and certainly off the high back at the end of February where we were up at around 13.50. All the way down to now 10.20. So I will look at the platinum chart as it looks to potentially be inching down a little bit. A brief glimpse at the Dow, up around 34.8, the engine that never could stop. We've had a lot of tops in the Dow, and then a lot of money printing to push us to the next top. I'm counting about 6 or 7 price movements here. Just going back from the beginning of 2021, that definitely should have been a breaking point in the Dow, offering a little bit of respite. And the problem, of course, is the bigger they are, the harder they fall. And that's my big concern going forward with the equities market. And finally, we brought this up with the dollar last week. The dollar was in this rising compression channel, and we had a break below that. We've come down in the dollar below 92, down to around 91.75, off of over 93. And the dollar looking very weak now over, well, the last 5 years, but certainly over the last couple of weeks. We did have that rise up earlier this year, but failing to put any higher highs in, and now looking like we're inching towards lower lows. And I think that coincides with what's going on in the currency markets and in Washington, D.C.
Yeah, I agree. And the dollar did bounce a little bit back up. It did the exact opposite of what gold's price action was this morning. It's back up to 92.25, so it's going to be interesting to see how that reacts to the bond market news, to the equities market news, to the Fed announcements. And that price action this morning in gold, we get calls on mornings like this saying, what's going on? What's happening? I kind of feel like we're on the interstate right now when it comes to the precious metals prices. You're mostly just straight. It's kind of this brainless drive. And for a long time, for 15 months, we were on mountain passes with just a ton of turns and volatility. But it's building. You can feel the potential energy building. This is the time of year seasonally where you start to get a lot of activity. This morning's activity didn't surprise me. What does surprise me is the excuses that people will accept, or the reasons that they'll accept for the gold downturn. And this morning was the Institute of Supply Management releasing their service sector numbers, saying that the service industry is doing great, and it is. I mean, it's at a record high reading of 64.1% for July, up from June's previous record of 60%. So that surprised the markets a little bit and did immediately reverse it. But to me, it has far more to do with what is considered a positive sign of economic growth, because we can have stagflation too. But more importantly to me was the bond market action. We saw the 10-year yield in the treasuries drop to 1.13 this morning at the same time that gold. They were separating from each other. And gold really should be stronger right now compared to where the 10-year yield is versus where it was last fall. Well, then it reversed and it went right up to 1.21 the same time that gold came back down to settle around this 1813. So we did see a high of right around 1840 and a low of 1805. That's a lot of volatility in a very short period of time within an hour of the market open. Silver had the same sort of deal. And what has transpired in the last week now? We've seen the gold-silver ratio come down from 73 to 1 last week that we talked about, back down to 71 to 1. So let's see if silver can continue to narrow the gap there and drive that ratio down. Anything else gold technically or a little more detail on the silver charts?
Certainly, long term, we looked at gold putting this little 2 steps forward, 1 step backwards floor in, potentially that double bottom back in February, March, and April. And now we're waiting to see if gold is capable of putting in a higher high. Now, that higher high would need to at least be around 1920 or above, and preferably up in the 1965 to 2000 range. So certainly with gold continuing to step up, like I mentioned, bottom back in February, March, April. We put a second bottom here right at the end of June, and if that second bottom holds, it's very likely we're going to see gold climb. Now that would long-term coincide with what we just saw on the dollar chart, the dollar looking very weak again like it did last year, and expecting that to continue down. So unless something akin to the bond market you were just talking about, interest rate related, ends up driving the US dollar up, I would expect to see the trend continue of gold rising, the dollar declining. And if gold goes up, it's going to pull silver along with it, and it's going to pull the thing we really want to talk about today, platinum, along with it. Now, I mentioned a moment ago platinum took a fair dive today. Platinum actually has put in a double bottom going back to the end of May, down at around 1020, and we're back down at around 1020 now. Platinum has never really put in much of a bear market since everything started going up last March, going from around 585 all the way up to 1350. Platinum making a substantial move up from March until March, where we topped out again around end of February this year, 1350. So we've come down about 1057 would have been your 382 fib. We're now slightly below that. It wouldn't be surprising to see platinum make a move down to around 965. Possibly even 877. 877 would be your 618 fib, but not necessarily. I mean, we'd still have to put in a lower low than what we did back here at the end of June. So with that being said, I think what's more important and why we keep talking about platinum, because a lot of people may look at these charts and say, well, yeah, platinum did great, but it's still a fraction of the price of gold. Or platinum is doing great, but silver doubled last year too, and on top of that, silver coins have this ridiculous premium that makes anybody who was a silver buyer last year feel like a genius. The reason we're still encouraging platinum is that exact reason.
That's the right word, encouraging.
Right. Something has to have led the charge. Gold led the charge, silver played catch up, and we genuinely feel like platinum is going to also. So we want to take a look back here at the platinum versus gold chart going back over the last, 35, 40 years. And what you can see here is you've got kind of a line in the sand on platinum versus gold drawn in at about 1.2 to 1.3, meaning that platinum should average around 30% above the price of gold. We have a high water mark back in around 2007, 2008, where platinum was 2.5 times the price of gold. And a low water mark we hit last March during the big COVID decline, that kind of shock drop we had in all the markets, where platinum fell to about 0.4 times the price of gold, so about 40% of the price of gold.
Like a 60% discount.
Substantial.
That's exactly what it represents.
So if you look at an average chart, I know we talk a lot about the gold-silver ratio, but the gold-platinum ratio, you look at a chart here, and if you had gotten into platinum last March, let's say you got real lucky, woke up one morning, realized the market was down, and dumped your fortune into platinum, you're looking at a pretty significant increase in gold ounces just getting back to the historic averages between the two, between 150 and a 200% return. And who knows, let's say we would have some type of massive melt up in the platinum price to 2007 returns, and you're looking like 300 to 400% returns in ounces. That's turning 1 ounce of gold last March into 3 or 4 ounces of gold when that reverses. So this is why we talk about ratios, because the dollar price takes care of itself. Would you rather have 1 ounce of gold and care what the dollar price does over 10 years, or turn 1 ounce of gold into 5 or 10 ounces of gold? Because at that point, even if the dollar price got cut in half, you've still tripled your money. So who cares?
Well, and the same is true for palladium. Same is true for silver. So we're going to throw those charts up here this week as well. And again, all of this is meant to not discourage the platinum holder, Certainly you can be adding to ounces, but we do two things. One, we limit the position of platinum because it is speculative. It is an industrial metal. It's less of a money metal than gold and silver are. So we limit the percentage. Two, we always do it in a buyer's market. You've got to look at these long-term averages and you've got to look for the value. It's the undervalued metal because what goes down must come up when you're talking about these cycles. Take a longer look here both at platinum silver and platinum palladium.
Yeah, Tori, and that's one of the reasons why we constantly bring up the idea of working with advisors like us at McIlvaney ICA. We've been doing this longer than anyone, almost 50-year company, and we've got a lot of data going back and tracking not just the spot price comparisons, but also various products, like the difference between 1-ounce bars and coins or 10-ounce bars and how those premiums play into these ratios. And then knowing the right times to get in or get out, not just expecting to be able to buy at the absolute low or sell at the absolute high.
And at what percentages?
Exactly. That's one thing we will continue to encourage our listeners, many of whom are already clients of ours. Definitely give us a call if you'd like to discuss how you can bring things like platinum, or if you're already a gold, silver, and platinum owner, how to bring some balance and purpose and foresight to your portfolio so that over time, as the U.S. government continues to print and spend their way out of problems, and the expectation of inflation rates going up over time, like I said a second ago, we know the dollar value is going to take care of itself. But here at McIlvaney ICA, our number one objective for clients is to increase their physical holding of precious metals over time.
So you talking about the spending, that's a perfect segue into a few fundamentals here for everybody to also be encouraged by as we're on this interstate of inactivity in the metals prices. But the debt and spending and inflation is still real. Guess what just had a moratorium? That is the debt ceiling discussion. So they put a moratorium on the debt ceiling with the federal government. That deadline has since passed. So now you're going to start hearing a lot of discussion. And the last time that happened, gold responded very favorably. Anytime you get into a congressional discussion on the debt ceiling having to be defined or raised, that's very bullish for gold because it's very weak for the dollar. And the other thing is the central bank, the Federal Reserve, is talking about this tapering. They came out and finally said, yeah, we are going to maybe even as early as September start having those initial discussions about when to start tapering the bond buying and the mortgage-backed securities buying in those markets. And that, unfortunately, will have a little bit of an economic downturn effect. But they're also talking about the earliest that they could have a target on raising interest rates being early 2023. Do you have any idea what sort of carnage is going to take place between now and early 2023? You're going to see market volatility unlike we've ever seen before. There's so much money in the system, and that's why they're having to come after cryptos. The SEC just came out and said they're going to regulate the cryptocurrency industry because it now represents over $1 trillion. That's $1 trillion that probably didn't even exist 10 years ago. And that's sort of like money out of thin air. And they've realized they've got to rein it in. They've got to get oversight because there's scams, there's speculation, there's a lot of harm being caused in that market. So all of that is going to weigh heavily on that market as well. What sits there tried and true over the long term? Your safe hedge, your asset preservation tool, your insurance policy on your portfolio, meaning your physical precious metals. And we can compound ounces and do that over time. And in short, right now, it's like, look, listen to us. These are great opportunities to add to ounces, especially when you see platinum down here like this. If we see the 965, awesome. Even better. High 800s, even better. But where the ratios are, that's the best. So be adding to your platinum position here as you add to your gold and silver with all of that transpiring. So before we leave this week, Miles, you had mentioned something about your concern with the equities markets tops. I want to bring up 2 points. One, equities markets tend to top in August. So get ready. I mean, just from a seasonal bias, just like we see lows in the metals markets in the summer and a reversal in the fall, the opposite is true for the equities markets. The other thing is, and we've talked lightly about this the last few weeks, but despite all-time highs in the NASDAQ, S&P 500, and the Dow Industrials, guess what is not conforming? Your favorite, the transports. That's right. Down 11%
Shocking.
in 3 months. Nobody's talking about it.
Yeah, it's amazing what happens when you make things but don't actually sell them and deliver them to people.
I'm telling you, it doesn't bode well. It's down 2.35% today alone. So have fun acquiring stocks, or as we said, cryptos here. A lot of risk in the markets out there.
Right, as the late great Dow theorist like Robert Rea used to say, the transports always lead the industrials. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. Do the usual YouTube stuff, like buttons, subscribe, share, give us a call. Most importantly, that last one. We'd certainly love to talk with you about your personal precious metals portfolio, and any of the advisors at McIlvaney ICA can be reached at 1-800-525-9556. You can also find more info on our website, McIlvaney.com. We're on Twitter at ICA Gold or Facebook at McIlvaney Financial.
Thanks for listening again this week. We hope you have a good one.